Yeah, anytime, kitty cat. All right, so it's a Thursday, the 18th of February, 2016. Hey, let's trade some Forex, huh? Why not? Sounds like a good plan. Let me clean up the office a little bit first. Come on, guys. Can't see them. It's dark. Put some lights on. Where's my pips? There they are. So, hey, good morning. Welcome to Forex.Today. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. An ECN that gives you fair access to the interbanking system. You pull the trigger, we execute your trade. No drama, mama, and for a reasonable price. We do these sessions every Monday through Thursday at Forex.Today and every Friday at FX Street. So without further ado, let's play the happy music and pop open some charts, huh? Oh, that's right. Yes, I did win Best Speaker Award, Best Forex Speaker Award at FXStreet.com. Thank you for that, guys. Appreciate your loyalty. Obviously, it's you providing the feedback, and I appreciate it. Cool. So let's get going. Bum, 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 bum. What do you want to do, huh? Let's start where we are. Do you remember the conversation we had about putting yesterday? And a lot of the conversation had to do with if I am long-term long, what do you do on days where you think the market's going to be short, right? Was that part clear? A long-term plan, but it doesn't work out every single day. Obviously, even if the trend is up, there are going to be days where red candles are printed. So anyways, yesterday we had the Aussie jobs report. It might have been today for you, but for me it was last night. So I shorted Aussie yen. But I'm long Aussie yen. But made 50 pips in about 40 minutes. Took my profit, walked away. That was that. Everything's good. Everything's fine right now. Could have made a little bit more, obviously, if I stayed in it, but that was risk. Right? And I was just trying to cover, right? Just cover the move. That's all. So I did that. So lesson given, lesson accepted or traded or whatever. So thank you for the question. That's what I did yesterday. So that's Aussie yen. I'm still long and made a little money on the pullback. Therefore, this retracement, I've offset at least half that risk, which is cool. So I wonder if we're going to be able to pick some of this stuff up on other currency pairs. Like CAD yen, for example, I was in at 82, and I guess I wasn't paying attention, and without even knowing it, I moved my stop. Did clearly too early. I don't know what I did, but I did something. ended up losing 2 pips, which means for me that's break even, right? So I was in at 82 somewhere, and which is down, 82. I think it was 82.10, something like that. So you could see what was going on, right? I was in here, breakout pullback kind of scenario, right? Somehow I jammed my stop and got knocked out somewhere. I don't know. I don't know. Honestly, I don't know what happened. So I must have been down here because that's too high. That's 82.20. So I caught that pullback, I guess, and then got knocked out. Too bad. Moved my stop too early. So anyways, we're way up here, 83 and a half. I should have been up 150 pips. Boo. But here we are now. So am I going to get back into this is the next big question. And I'm a bit worried if you're using technical analysis because we've had our retracement. We've had our 382, and it was supposed to make a higher high. Okay, it hasn't. Okay, so I'm worried that we are in a period of consolidation. Okay, it might just be temporary. It could just simply be the daily chart, right? So if we go back a little bit here, remember this? A few days ago, it was an expected pullback. So you should just expect that to happen, even if you're long-term long. You should just expect this to fall here. Do you guys remember why? Yeah, cat, obviously pound is moving. Okay, and that's obviously going to do with what's happening today in Brussels. So if you want to trade, the flavor of the moment, the non-repeatable trade, I'm not going to stop you, but I'm here to teach you the fundamental technical analysis and the how to trade in regular market conditions that occur over years and 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 years, right? So I'm never really interested in the one-hit wonder because it only pays once, and a lot of times you end up losing money anyway. So yeah, I'm only interested if it's not repeatable. I find it boring. Doesn't mean you can't trade it and make money, but it's not much for me to teach you, right? So yeah, anyways, yeah, Hendricks got it daily 21. So we might just be caught between the daily 5, daily 21, and break to the upside. This is an old trade plan, but let's update it now. And okay, and it might look like that. And we're just stuck in here, right? Right, you see? So maybe it just tickles the 5 and then breaks to the upside and we're all good. You're going to need oil to go up. You're going to need the stock market to go up. So let me tell you something. You remember about I think it was late last week I showed you the S&P 500. I drew a line in the sand. I said it just has to go up here. Has to. Well, we've had the 3 huge up days in the stock market since touching my line in the sand. The biggest 3-day rally in something like 12 years. And if today turns out to be over 1% positive, it'll be the best streak since 1982. Hey, because of my line. Boom. But that's just S&P 500. We're currency traders. But if you want this currency pair to go up today, you're going to want to have the S&P 500 go up today. Joseph says, where do you enter Fibonacci retracements are the best one. Okay. So you find yesterday's trading range and you buy there and you hold. So like I'm supposed to be up on this one and I don't know why, but I jammed my stop really early. I don't know why. I think what was happening is I was mentoring and I was talking or listening or we were doing an example and I just wasn't even paying attention and just moved my stop. I don't know why, but somehow I moved my stop to break even. Dumb. Broke even instead of made money. Yeah, Joseph's like billions of orders must have been sitting on that red line. Well, at least, I guess what it's showing is that um, if you use your technical analysis properly, what you're identifying is what everyone else is likely to do versus trying to outsmart the market. You're not trying to outsmart the market with technical analysis. You're trying to figure out the market with technical analysis. Wayne, how you select pairs for the day? Yeah, all right. That's an easy question. What's your specialty? See, right off the bat, that's helpful, right? To say it differently, though, well, that's what you trade. That doesn't mean that you have a specialty. What is your marketable idea? Putt putt. Again, that's not a mark. Okay. Let's say you want me to give you $1 million to trade with. Okay. What are you going to do with it? Well, I don't know. Yeah, put it in the bank. Um, so you kind of have to have a specialty. Like, what do you trade? And I'll give you an example. I could do things like when days are bullish in global macroeconomics, I simply buy Aussie yen. Okay. Or I might, how about this? Let's just simplify it. Get rid of the macroeconomic stuff. When I see bullish setups on the Aussie yen, I buy. When I see bearish setups on the Euro USD, I sell. That's it. So I just picked. That's how I select my pairs. Usually I have a bias. There's another way of saying it. Okay? But I think if you simplified your trading, you would do better than kind of looking for all flavors. Now, the other thing you can do is relative strength exercise. Okay? But the thing is with relative strength is it's already happened. Okay? So let's start here. Scan USD. Well, right. So you just go through the pairs and find out which one works for you. Well, look, you on Monday you go through the calendar, right? And you say, I wonder what's going to move this week based on news on the calendar. So, for example, Aussie jobs report. So I traded that one. But that's more of a tactical thing or shorter term strategy. That might not be part of my long term bias. But that kind of planning is helpful too. Like, are you preparing for the IMF report several weeks from now? Is it going to be good? Are you preparing for UK GDP? That kind of stuff, right? But let's do relative strength. Let's say you don't have a specialty. Okay. Let's make all of these 4-hour charts. 4, 4, 4, 4, 4. Okay. Pound stronger than the dollar. Euro weaker than the dollar. Aussie weaker than the dollar. Mexican peso stronger than the dollar. Right? Wow, mixed bag actually. Okay, this might go up, but it's been down. This is, so dollar maybe stronger, dollar maybe weaker. All right, so I've learned something right off the bat. The US dollar is neutral. Can you see this? Where what I'm looking for is all three of these should be down. All three of the bottom ones should be up. And if so, the dollar's strong. Or the opposite would tell me that the dollar's weak. But I don't see clear direction on any of these. This is obviously with the what's going on today with the UK, but these are kind of down, and this might be up, but this isn't quite up or down. And so the US dollar currently, based on this quick scan here, is generally neutral. There's no clear direction. So I'm not going to trade dollar. Okay. What about yens? Four hour, 4 hour, 4 hour, 4 hour. Let me zoom in. Okay. I stayed, okay, let's start with euro. Okay. Euro's weak at the moment. So we've learned that, right? Euro dollar's down, euro yen is down. So now we've learned two things. Well, for sure, one thing, euro is weak. Okay. CAD yen generally up off of a double bottom. Pound yen, I wouldn't call this a double bottom, but is trying to turn up on the 4 hour. Aussie yen up off of a double bottom. So the yen is trying to weaken in some cases. CAD yen double bottom, Aussie yen double bottom. This is also, I bought the double bottom, as you know, in Aussie yen, and I'm supposed to be in this CAD yen, but I made a mistake. But you can see that the trade setup's a little bit better, right? I stayed away from pound yen because it didn't really make a nice double bottom. It made a lower low, right? So I kind of ignored this one. So looking at these charts, euro is weak and pound has been weak. So again, a little bit of a mixed bag. Commodity currencies seem to be doing better. So looks like so far I've learned euro's the weakest. So I could just take that knowledge and I could go to like a, oops, I didn't mean to do that. I could, if I have it on my charts, I could go to a euro scan and just sell euros today. Right? Or I could try to figure out which of the euro pairs is moving the fastest, and what makes it move the fastest is take a weak euro and attach it to something very strong. So I'm going to move these to hourly charts. I know the other ones have been 4 hours, but we're more interested in getting into a trade now. Okay. Euro pound seems to be moving quite quickly. Euro CAD seems to be moving quickly. Euro Kiwi, oh, stuck, but maybe. In Euro Aussie. So Euro Pound looks like the one that's moved the most so far. Right? And so I can focus on Euro Pound if I wanted to. Okay. And it's sort of a process of elimination. Okay. And now you've narrowed it down to this. And then it comes down to what you want to do. Are you going to trade the price action up and then back down? That's your call. So the other thing I'd like to say about what we did very quickly in that relative strength is I didn't see a massive opportunity for the things that I like. I like to see US dollar strong across the board, or I like to see yen strong or weak across the board. It doesn't matter. Same thing with the dollar. If the dollar's weak across the board, great. So if I were to sum up my trading, I would say I trade the US dollar and I trade the Japanese yen. And I do so based on long-term technicals and global macroeconomics. Okay. Why don't just use a currency strength meter? Yeah, and that's the other way of doing it. My currency strength meter, Joseph, is 18 screens. So I just look up and I say, oh, and I'm done. Fred, I only have one computer. Actually, know what? No, I'm sorry, I don't. I have two. I forgot. I'm having a video card problem. So hang on. I'll show you. I'll show you. Oh, Freddy boy. Okay, hang on. All right. So that's my computer setup. For my main PC, and I'm having a video card issue. I think it's just a Windows issue, but it's not working, and everybody says it's supposed to work. And you have to start doing things like updating BIOSes and stuff. It still doesn't work. So whatever. So the two screens that you see the TV running on, that's one of my micro PCs. So that's running too. But how much RAM? Why would I need a lot of RAM? These are all two-dimensional charts. It's not processor intensive. It doesn't require a lot of RAM. How many pixels update on an MT4 chart? So let's say I'm staring at a 1 hour chart here. Okay. Look. Oh, 1 pixel changed. Oh, one pixel changed. Right? Oh, oh, another pixel. I mean, it's so small that you can't even really even see it, right? You don't need a supercomputer, but you do need a custom built motherboard and that kind of stuff. No, Greg, it's something else, but it doesn't matter. I have like, no joke, I just go to the closet and I'm still must have 5 or 6 PCs I'm not using. But anyways, so that's that. Maybe one day I'll take you for a tour through my charts. Yeah. So is anyone going to meet me in Shenzhen? Is anyone going to hang out with me in April? How many platforms am I running? Uh, there's one MT4 running these 6. There's one MT4 running these 6, and then one here. Yeah, and these, I think Dubai will also happen. Uh, the Forex people want me to speak at their show as well, but that's not going to happen. I don't have the time that particular weekend. I think I'm at space camp with my son. So I'd have to choose, fame and glory or spending time with my son. So I choose my son. Yeah, totally. But I think I can get there. I think I'm going. All right, sorry to sort all this out, guys, but hang on, we're all friends. All right, I think I'm going to be in Dubai. I think I'm going to fly in March 5th. Boy, that's coming up fast, huh? March 5th and leave March 8th. Is that something you can do in these? And then I will be in South Africa. I think I arrive on the 27th and leave Johannesburg the 29th. And then I'll be in Shenzhen. Um, I think I arrive the 16th and I'll leave the 19th. So basically, I'll be in the Middle East, and then 2 weeks later, I'll be in Africa, and then 2 weeks later, I'll be in China. Usman, right now, it's going to be pretty much me by myself. Daniel might meet there. But Daniel, I was thinking we should just meet in Shanghai. You should just skip the show. Meet me at Shanghai. We'll just spend the day in Shanghai. Just that idea. I doubt you'll learn anything at the show. I don't know. You're a pretty experienced trader. But having lunch with you in a small town outside of Shanghai sounds like a fun day. But anyways, so if you guys want to do, those are the 3 days back to back to back, or 3 events back to back to back. Plus, it's always nice to be in a small cultural place like that with someone that speaks the language, because I'm a person with a lot of questions. All right, let's take a look at oil. Well, Bruno says it would be great to see me in Portugal. You know what? That sounds very exciting because, I mean, if you're going to be in the Middle East and then 2 weeks later you're going to be in Africa, then 2 weeks later you're going to be in China, right? And then 2 weeks later you hit Europe. All of a sudden I'm hitting like all 4 corners. All of a sudden you're like, you just kind of want to do it just to make sure it's all done. You want to hit all 4 corners. But there's lots of people in Portugal. That might be a good meetup. So I thought maybe we should do that in May, which would be about 2 weeks later. Have an event in Portugal, and then drive over to Spain and run with the bulls, and then come home. Okay, well, Mark wants to do CAD. I want to start with oil first, if you don't mind. But guys, here's the thing. I don't have much time, so I'm trying to squeeze these trips together because I think I'm going to be unbelievably, terribly busy in the second half of the year. So if you can get 10 people together, I'll fly out almost anywhere. If you can get at least 10 people together for a trading event. All right, so here we are with oil. This is hourly. I know there's a bunch of things going on here, but you can see, let me back out a little bit. I think you guys remember doing this, right? So we were down at 27.95. So we were at 28, and I have it going to $37. And this Gartley, I don't even know if it's truly a Gartley, but what I did was I fibbed it up, then I fibbed it down, and then I fibbed it back the other way. Is really what's going on. That actually might be a Gartley. Like I said, I'm self-taught, and so I think that might be how a Gartley is done. But anyway, so this is up, and then the 786 of this up, and this is the 786 of the reverse up, and then so back into here. But the funny thing is, several, a week and a half has gone by now, and we have indeed gone from 28, and we're up here at 34. That's $6, man. Oh, here's a thing. How do you get MT4 on multiple screens? Watch this. Okay, do you get it? You see how I do it? I just drag MT4 over 6 screens. There's also software you can buy so that you can pop your charts off the MT4 platform, but I just expand the platform over 6 screens. You get it? And then I can create layouts for the 6 screens, but I can also create layouts. So this layout is called 6 screen. It's a profile. This is what it looks like with this standard profile. Uh-oh. There we go. So that's what MT4 looks like when you install it for the first time. That's the standard. It looks so small, right? So the screens are high resolution. But anyways, and then so you just create a profile like this. You're running a platform for every screen. No, 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 Jimmy. No, 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 no. Yes. No, you're no, that's not the right way to do it, Jimmy. Yeah, but you will slow things down eventually. All right, cool. So anyways, guys, this is part of the, I expected the stock market to rally idea. So that's happened, and you can see now price has been going up. I didn't want to remove both. All right. So if this continues, then you do things like buy CAD, right? So it's not a huge opportunity yet. I'd almost want to see it go up to 35 and then come down to 33 and then have it go back up. So we'll see what happens from there. Usman, okay, you guys have lots of fundamental questions. I'm okay to answer those. Usman says, Wayne, is it when the S&P 500 goes up that the US dollar drops? Okay, that is something you probably read in a book, and that would have been true several years ago. Okay? That's not the world we live in now. Okay? And I'll explain why, which is much more important. In today's world, if the S&P 500 is going up, it's because it's the best stock market in the world to invest in. So therefore, foreigners want to put their money into the US stock market. Not just Americanos, but foreigners. Maybe they're taking it out of the Euro stocks. Maybe they're taking it out of Chinese stocks. Who knows? So you therefore buy US stocks because they're the best and the economy is the healthiest right now, okay? But at some point it becomes oversubscribed, the valuations are too high, unattainable, it's a crowded trade, it's expensive, and suddenly if you're already exposed to that money, you might want to look for other opportunities. And this is in particularly true if you're a US company or a US investor. You started with US stocks. That's probably how you made your money, right? So you get to a point where you're looking through the US stock market and you can't find the right valuations, because remember, price is what determines yield. You might have lots of stocks from lots of good companies that are going to be profitable in the near future, but it's already been priced in, and then a premium on top of that, and you're like, well, I like this company, but I'd be a fool to pay this amount of money for a stock, right? So what you do is you start looking for your alpha outside of the US market. And you start looking at, hey, let's invest into Vietnam. Maybe we can pick up a cheap stock in Europe. You know, let's buy some Greek companies, right? A Greek bank. And you start looking at these other other opportunities outside the US borders. And then all of a sudden now your money is leaving the United States, okay? And in a healthy market where not just the US economy, but the global economy is improving, a lot of money is flowing out of the United States. Okay? So you'd say S&P 500 is up, but maybe everything is up, and the better opportunities are outside the United States. And so the dollar weakens when the US stock market's up. That it would have been true in 2005, for example, right? Stock market up, US dollar down, easy peasy lemon squeezy. In today's world, stock market up, dollar up. Why? Foreigners are buying into the US stock market. Oh, prices are high, but it doesn't matter because there's nowhere else to put your money anyways. Right? I guess you can put your life savings into the Portuguese stock market, but whatever. Usman says, what do you mean by alpha? All right. The market risk, market volatility, market action, market forces, that's represented in the formulas as beta. The overall beta. Okay? The market goes up, the market goes down. The market goes up, the market goes down. The market goes up, the market goes down. And how fast it goes up and down. The volatility, right, is also beta. It's just a measure of that. Okay? Your alpha is your strategy. The things you do to outperform the market as a whole. Beta meaning the thing that you measure your actions against. Okay? Your primary strategy versus the overall market as or benchmark or whatever it is. Okay? If you're a hedge fund manager and you do benchmark yourself, or let's say you're a mutual fund manager, that's a better one. If you're a mutual fund manager, it's your performance versus the S&P 500 index. Why would somebody pay you fees if you can't beat the S&P 500 index, which they can get for basically no cost, right? Why would you pay a manager when you can just buy an index? So the index in this case is the beta, and your mutual fund's performance over the same period of time would be your alpha. And the theory is your alpha adds value above and beyond. So let's say your fund is up 5%, the S&P 500 is up 3%. Okay, you would subtract the 3 from the 5, and you would have 2%. Okay. So that's what I mean by alpha, your ability to do better. So like a few days ago, we talked about what if the beta is low? So over the last, let's say over the course of 3 months, the stock market or Forex market in general, whatever it is you want to call it, let's just say the market is flat. And it was either last summer or the summer before, I can't remember. It was the lowest volatility in the history of Forex. And it was like a 3 or 4 month period where nothing happened. If you were a wise investor looking for investment opportunities into a Forex manager, you would look at the trade history and say, okay, well, I know during that period of 2014, as Usman says, that that period in 2014, the beta was low. I want to see what this manager did during that period. So you could go there and say, holy crap, this trader lost a ton of money or made a ton of money. Either way, it's undesirable. Because how do you make a ton of money? And you might think that's good, right? But how do you make a ton of money if the market didn't move? You over leverage. Is that something that you want someone to do with your money? Yeah, you say, no way. And then you ask the question in a different fashion. You sit down with the money manager and say, all right, you want me to give you $1 million. How much of your money is in this fund? I don't have any money. All right, smell you later, dude. Okay, does that make sense? So there's your alpha and beta. So Usman asked another question. Yen is a risk-off currency? Risk off, risk on. What's the difference? It's a funding currency. It's cheap to borrow. It's expected to continue to be cheap to borrow. So therefore, when the market is favorable to making investments, you borrow the Japanese yen and you make investments, which means you increase the money supply, Japanese yen money supply globally. When money supply goes up, valuation goes down. But then let's say something goes wrong and it's not a good time to invest. Things look bad. Chinese stock market tanks. You're like, oh no, got to get my money out of China. Withdraw your risky investments. Now you want to pay back your loan in Japanese yen. So now you need to buy all this Japanese yen. Well, now demand for yen goes up. Money supply globally for yen goes down, right? Yen gets more expensive, and then you pay back your loan. So is it risk on or risk off? What's both? What does that have to do with anything? If the market is good, you borrow yen and invest the yen. So yen weakens because there's more yen worldwide. You flooded the market with yen. If things are bad, you get out of those investments. You need to buy that yen back. You need to pay back your loans. Demand for yen goes up. Supply for yen falls. Valuations increase. That's it. Right. So Usman says, you've been reading about safe haven flows and that risk off people buy yen. No, that's not quite right. The way that I'm explaining it is when times are good, they borrow yen. And when times are bad, they just pay back the loan. It's not like they're like, oh my God, I got to buy some yen because it's the end of the world. No, it's not quite right. It's not quite right. I mean, yes, they're actually buying yen, but it's not because they want to be in yen. They're just paying back their loan. They're just getting out of the trade. It's not that they're buying yen. They're just getting out of the position. Okay? So you got to be careful. I know the semantics is the issue, but the underlying logic is much more important. Yeah, but Anise, I told you in August of last year that the Japanese yen would be strong in January. So it's not a complicated matter. If I can give you 6 months heads up and explain to you why, and then it gets ripper strong, I just don't know what degree. Is it going to be strong for 2 weeks or 2 months? I don't know that, but I know it'll be strong. It's I mean, dare I say, easy, right? Sure, Usman. Japanese, well, the Japanese are doing what they can, negative interest rates and stuff. But will negative interest rates change the fact that Japanese companies are going to repatriate their money before April 1st due to the end of the fiscal year? No. So the yen's going to get strong. When that flow stops, the yen will weaken again. Now, let me draw something for you because you're looking at charts and I'm not even using them. So let me draw something for you. Okay. This is what the yen will probably do. So let's say, oops. I got too many lines in. All right. So there we go. I had it there. You know what? Let me just do it this way. All right. So for the while, the USD yen looked like this, correct? And now it looks like this. Here is what my prediction is. It's going to look like this. Okay? And then it's going to look like this. Joseph, it's a big country with lots of companies. It's not like everyone repatriates their money on the same day. Okay? There you go. Do you know what day it's going to go up? Do you know when this is going to happen? This kink? Third week of August. Why? Because I said so. Yeah, see, to me, it's always an interesting thing that it's an interesting thing for me, because I'm an outsider, sort of, because I find it interesting that you don't know. Because it happened last year, and because it happened the year before, and because it happened the year before that. Yeah, it's just seasonality. Yeah. What's the underlying reason? All right, this is going to blow you away. Are you ready for this? Okay, everybody ready? Because traders and investors return home from summer holidays. I know it's stupid, but it's true. That's how the world works. They come home from vacation. That's it. Then they're like, holy crap, I got about 3 months to make my bonus. Better trade like crazy. Yeah, that's it. That's it. I'm telling you, the key thing to trading is human nature. You need the big things are like clocks and calendars. That's pretty much it. Yeah, Greg wants a better answer than that, and I know it's funny, isn't it? I'm telling you, I know it's stupid, but it's 100% true. It's just simply people coming back to the market that have been away. And this is like April and May. April, May, okay, let me change it a little bit. Okay, April and May will look like this. June, July, August, September, October, November, December. So over here on the left hand side, September, October, November, December, January, February, March, April, May, June, July, August, September, October, November, December. So Mark says, well, so here comes 130. Well, okay. So now let's get a little more detailed. Okay. What will you need to see based on macroeconomics to make that happen? Yeah, MK says that's what I told you last year. In fact, I spent the whole month preparing you. And if you didn't make 20,000 pips at the end of the year, then you just didn't do it. But that's fine. Maybe you'll do it this way. So Mark says rate hikes. So yeah, the US should raise interest rates. What else? But I agree with you. I don't really think they're going to raise again until December. More quantitative easing. You know what? Yeah, more quantitative easing. Not out of Japan, though. I don't think they're going to do that. If I were to guess, if you don't mind, more quantitative easing out of Europe would make the Euro USD fall, which would then make the USD yen rise. Okay? But, and that is a big but, because that's my favorite joke. But I do think the Japanese will do more and more, or bigger and bigger negative, more and more negative deposit yields. Yeah, well, Usman, I don't see that data and I don't see it priced in. I think that's what they wanted to do, but I think they were flabbergasted in the response of the December hike. Right now, that's not priced in. So I don't mind capitulating on that. It's just not in the data at this point. So like the last time I looked about the March meeting, the last time I looked, there was 0% chance. So very little chance that they're going to do it, right? So, anyways. All right. So, yeah, so we need things like more quantitative easing out of Europe, more, how do you say more negative? It's such a, the Europeans report their data this way, but my mind just doesn't work this way. So, higher negative yields, which are lower, so more or less, more or less interest. Um, right? So negative interest rates will have to be more negative. I can't even say it, right? Have to be more negative, right? Interest rates rising in the United States, and generally speaking, the stock market's going up. And and we have to mention oil and stable oil prices, meaning they're either going up or sideways, but not down. If you can put those things together over the next 6 months, then we will end the year higher. Okay. Increased negative interest rates. Yeah, Mark, but it's still, how do you say more negative? That doesn't even seem to work in my mind anyways. How could you be more negative? Right? You have more or less of everything. Right? Times are tough. I have more nothing than I used to. So anyways. So there's my thought, guys. The whole point here is human nature. Let's say it's the middle of July. Are hedge funds around the world and bankers around the world putting large sums of money into the market? Let's say the third week of July. Have you ever been in Zurich in let's say the first week of August? Zurich is a big banking center in Switzerland. I've walked the streets of Zurich in the first week of August, and it's a ghost town. There's entire buildings that are just completely empty. Entire buildings. And you're like, where is everybody? They're like, are you stupid? It's August. They're in like Belgium digging holes in the sand or something. But they're not in the office. It's closed. They're not making big investments. They're not. I'm not joking. It's an absolute ghost town. So that's what I think of. What's going to move the market in July? Late July, early August. Nothing's going to move the market. Okay. Yeah. Who doesn't love Switzerland, Korean? Has anyone ever run into somebody that says, "Oh, I can't go to Switzerland. It sucks." Right? Like, really? Yeah. I think we should go and spray paint something bad on the side of the Swiss National Bank building. Liars! Thieves! Yeah, I lost money on that. So, anyways, so you need to think about what's going to happen. How about like in April or May or June? Are you going to throw in a big trade just before summer? But then you're like, but I don't know what's going to happen over the summer. Rob, I have a solution for that. Rob says Switzerland's expensive. I have a solution for this and many other problems. Just make a ton of money and be filthy, stinking rich. It won't solve your problems, but it'll make your life a lot more comfortable. Yeah, it's a great solution. Won't change your life. It won't make your children respect you more. It won't make them pick up their backpacks off the floor, even though you've told them 97 times. Right? But your mattress at night is very comfortable. All right. So, anyways, so that's that, guys. Believe it or not, I think the two most important tools that you could use as a trader uh, is a calendar and a clock. Right? So things like, I'm mentoring somebody right now, and one of the things that we're working on is a clock where we're working on specific times of the day to enter in a swing trade, specific times of day to enter a putt, right? That kind of stuff. A clock. You could do things in like look at your watch. I don't even wear a watch. You look at your watch and say, "Oh well, it's not going to move for another 2 hours, so I'll come back. I'll come back in 2 hours." Usman says it makes you happy when you spend it right, when you spend it on others. Yeah, I love supporting the staff at the Ritz-Carlton at various places around the world. I've dedicated my life to ensuring the staff at the Ritz-Carlton have jobs. But that's just because of the kind-hearted person that I am. What's the end of my session indicator? I don't know. I don't, I don't have it on these charts. Next time I have it on the chart, let me know and I'll open up the indicator list. Yeah, it's something like that, like 4 sessions. Yeah. Okay. So pick a pair, any pair. You're probably what trading the the Euro USD or the Pound USD, right? So do you see all the putts here? I've spent so much time on it. I'm just assuming you're doing this. Okay, but down, up, and where is it going to fall, guys? When you're down here, when you've made the lower low, and you're like, man, I wonder if I'm going to get another chance to sell it. Where do you guess? Okay, let's say you don't have a fib. You don't even have a fib, Joseph. This is a 5-minute chart. I wouldn't really pay too much attention to the 21 because no one else is paying attention to the 21. 5A cross? No. Bottom of the last move. It's called roll reversal, guys. Okay? You don't even need a tool, right? So somewhere in here, you're going to sell. Now, keep in mind, at that time, the 21 EMA was way up here. That's why I say not the 21. It's lagging. Roll reversal. Okay? So you sell it. Fine. Down. So normally I'll drag this across. Now, in this case, it didn't work. Okay? But cry me a river. Okay? What am I going to do? Tell you that it's always perfect? Okay. So anyways, this takes off, drops to new low. Now what do? Drag it across again. That's your new sell zone. Oh, this time it did work. Oh yeah, well, okay, fine. Back. So now you sell, right? See, every time here, you've probably made one, I'd say 2 trades that are profitable on this. And now you're thinking about doing a third shot. Am I right? I'm just assuming this is the stuff you're doing. Okay. But that's what we talked about yesterday, right? When we talked about putting. Funny thing is I trade the 4-hour exactly the same. Yes, James, they're always OCOs. Okay. The other thing you need to always pay attention to is at some point it's going to want to come back and make a bigger fib on a macro level. Or let's say just higher time frame. So if it came back up to the 111 to 111.20 area, then all it's doing is a fib this way. Let's see, is it going to let me move this? Okay. It could still do this and then down. It's the same trade that we did on these other charts, except on a 15-minute chart, not a 5-minute or a 1-minute. So every once in a while, you have to pay attention to that. Okay. Capiche? And yesterday I taught you guys how to do your OCO more quickly. Have you, I was joking, I said it probably takes you guys at least 1 minute to enter in a 25-25 OCO. And then I showed you how to do it in less than 20 seconds. Have you guys made an improvement there? Can you enter in a 25? How about this? Can you enter in a 27.33 OCO in less than 20 seconds? Without using an EA. Just doing everything manually. You can do it less than 20 seconds? Yeah? Both the limit and the stop? Good. Because I made a joke yesterday that it probably takes some people over a minute, and a lot of people said yes, because they're manually calculating what's 27 pips from this price, and and then okay, and then what's 33 above, and it's taking them a lot longer, right? No, but for the OCO guys, not just for, right? All right, so anyways, it's going to probably do the more macro thing. I'm going to look for a 111 to 111.20 short, as I have here, so we'll just see. And it might happen around the open of the U.S. stock market. So I got to go. I got to prepare for that. And I also have to prepare to get my visa for China. So seriously, I'm going to be in China, I think it's the 16th of April. I'm doing a speech, and I'm sitting on like 2 or 3 or 4 panels. But other than that, I just want to hang out and maybe stay an extra day and trade and do a paid event or something like that. But really, my plan right now is just to go there and I don't know, have an opportunity to have a drink with you, maybe. Yeah, Mark, FX Street contacted me and they asked that we try something different, and they asked to make the event premium. And I said, it's your site, it's your service. If you want to try that, I always say yes to supporting FX Street. So if FX Street wants to make my stuff premium, my only caveat was that whatever I do, non-farm payrolls has to be available to everyone. And they agreed to that. Also, next week, it looks like I'm going to do a special event. I think it's going to be on Monday morning because it's the 10-year anniversary of my first webinar. And so I'm going to do the same webinar I did 10 years ago. 5 ways to leave your lover, how to exit a bad trade. Rick, you see this account here that you see every day? Right? It's got money in it. Yeah, no, I tested a trader out, and he sucked. So you lost some money on it. But yeah, this is just a play account. But you're right. So, I'll get it back up to 100 and then I'll try something else. So anyways, gotta go. Peace on earth. May the pips be with you. May your profits be above average. And so I hope to see you in China. Not too many people are freaking out like, oh my God, I totally want to meet you in Shenzhen. Really? I'm going to do that one alone? Yeah, Ryan, I was going to make a comment, but you said it, not me. Cool. Really? So who's going to meet me in Shenzhen? It's basically Hong Kong. My gosh. All right. Well, I guess I'll eat my meals alone and I'll cry. How lonely it is. Yeah, right. All right. I'm wondering if this is going to be our Euro USD trade. It's getting elevated here. So peace on earth. May the pips be with you. May your profits be above average. See you tomorrow. Cheers.